Good morning, everyone. It's a beautiful morning. I'm not sure where you are in Florida, but it is absolutely gorgeous in South Florida. So welcome, welcome. My name is Carol Martin. I'm a past president of the Broward Gold Coast FAMP, Florida Association of Mortgage Professionals, those who don't prefer the alphabet. We are so lucky today to have Angel Oak, one of the founding fathers of the non-QM. John liked that one. Okay. And we're lucky to have three of the most Angel Oak's most outstanding shining stars, one I happen to know very personally. And I'd like to introduce them to you today because you have not one, not two, but three speakers that are going to give you all you ever wanted to know about non-QM. And if you're not doing it now, you're crazy. Because you could be making some money and filling your pipeline. Scott, wave your hand, Scott. Scott Gruebele, I've known for many years. He is a top producer with Angel Oak for 20 years in the non-QM space. And his motto is, let me tell you, he has a true commitment to customer service. I know firsthand. I know that firsthand. QM can grow your business and build your referral relationships and fill your pipeline. Alina, say hello, Alina. There we go.
Hi, guys.
Thank you for being here. She started her career on the retail side, did marketing, processing, and selling, and she moved from Atlanta to be down here in South Florida, with us. So thank you for being here, Alina. And the big guy, John Jeanmonod. John is the VP of sales at Angel Oak, and he supports the brokers and the correspondents. He's had over a decade of focusing on non-QM space. As he put it, it's all I know and I love. So thank you all. Thank you all three of you for being here. And thank you all the attendees that registered and those that are here. You are in for a treat. We have a networking event coming up February 17th. If any of you guys are going to be in the area, it's going to be at Brimstone, February 17th, Thursday night. And they're going to teach us how to roll sushi, how to make your own sushi. We're calling it Sushi Tsunami. We had a mojito making class there one night, and it was standing room only. It was a lot of fun. So if you're in the area, please, I welcome you to come. Now, this is a lead up with Angel Oak to our trade show on March 9th. You've got to be there. It's always an event. It's not to be missed. Right, Scott?
Absolutely. Always a fun event.
If you're not a member, you should be. There's no reason not to be a member, and we keep you up to date on everything you need to know to do your job to the 110%. So without further ado, I would like to turn this over to Jean or Alina or Scott or whoever's going to start. So thank you guys for being here.
Yeah, Carol, I'll take it from here. And thank you to FAMP Broward County. Kudos to them for, bringing you content, not just from Angel Oak, but from all their partners. So kudos to you and kudos to people attending today. The market is volatile right now. Everything's changing. So we really know how non-QM can help you grow your business today and for the foreseeable future. So again, I'm John Jeanmonod, Regional VP of Sales here, and I am honored and grateful to have two great account executives joining me as we're going to take you through a deep dive into bank statements. This is just specifically about bank statements. We want you to, this is as interactive as you want it to be. Ask any questions about bank statements because I do have the two subject matter experts here to answer your questions. And we're going to get started right away. We're going to jump right into bank statements. But before we do, Alina, before Alina covers the highlights of our bank statement program, we're going to start out with a poll here. And the poll is, have you closed a bank statement loan in the last 12 months? So while the poll and while the poll is going on, I do want to share one stat with you guys here, just to show you how self-employed borrowers are not going away. In 2020, new business applications grew by 24% over 2019. That's the largest increase in business applications in over 10 years. And I don't think we see that slowing down. You know, the great resignation is going on. Those people aren't stopping working, they're starting their own business. So from 2020, those borrowers in January, if they started their own business, guess what? They're eligible for our bank statement program. So as you can see, you know, you guys are in Broward County, you guys are always ahead of the curve, which is remarkable. 45% of you, excuse me, have closed a bank statement program in the last 12 months, where that's usually about only 20%. So obviously you guys are ahead of the curve, and that's because of your Broward FAMP chapter always bringing you relevant content. So Alina, take it away with highlights of our bank statement program.
Sure. Thank you, John. Thank you guys again for jumping on the call. Appreciate everyone's time. I'm going to start off with a brief overview, and then we're going to dive into specifics and details. Bank statement is probably one of our most popular programs. We do about 60, 70% of the business. It's perfect for your self-employed borrowers that would not qualify regularly because they're writing everything off on their tax returns. It's not leaving them with enough to purchase a home that they would like. Some of the details, some of the background on the program is that starting credit score is 600 plus. Please keep in mind that this is just a starting rate, which a starting score, which fluctuates obviously on occupancy, the purpose of the loan, and so forth. We do go up to 90% LTV, and there's no MI. So that's a great conversation piece to have with your customers. Minimum loan amount here is going to be $150, and that's a pretty hard stop for Angel Oak, but we will go up to $3 million, and case by case, we'll even go up higher than that. You do have an option to do either 12 or 24 months business or personal bank statements. The seasoning for any housing event here is going to be 2 years, and when you guys are pricing out the loans on our website, which we'll show you later, we have a very easy pricing engine for you guys to use. It's all going to be priced with a 30-year fix, but you do have an option to do a 40-year interest only. Some of the qualifications that we'll look for if you go in business bank statement route, we want the borrower to be minimum of 50% owner of that particular business. On the personal account, you do not have to be incorporated. You could be a 1099, but if you are incorporated, you just need minimum of 25% ownership of that particular business. You can do purchase, cash out, rate and term. You could do owner-occupied second homes, and we'll go up to 4 units on investment properties as well. And then we do look at the expense factor when we calculate income, which we'll go into detail in a little bit. And we start off for any calculations at 50% expense ratio for any particular business.
Yeah, hey, Alina, great overview. And I just want to remind the attendees, this is as interactive as you want it to be. There's an area on here where you can ask questions. So ask away. We have two of the best AEs in the business out there, and they do a ton of business bank statement. So Scotty, questions are already coming in. You know, talk to us a little. What's the credit score for a 90% LTV?
So for 90% LTV, it's going to require a 700 minimum credit score. 90% LTV, 700 minimum credit score. We can go up to an 85 LTV with a 660 credit score, though. And as Alina mentioned, you can actually do a 600 credit score to qualify for the program. That'll get you up to 70% loan to value. So there's different tiers there that we offer, but at the end of the day, you can go down as low as 600 credit score, get into a bank statement loan, 70% LTV.
So Alina, the question was here, and I think you mentioned it, but just to clarify for people, what's the DTI, both front and back end ratios?
Great question. 40 on the front end, 50 on the back end.
Right. And guys, keep the questions coming in. This is going to be recorded. We are going to get this out to everyone by end of day tomorrow. So keep those questions coming. Scott, we promised everyone we talk about everything from the 1003, because this is just about bank statements. Next week, we're going to talk about ICF and debt service coverage. So we're doing a deep dive. We want you at the end of this call to be able to really talk intelligently and almost be an AE on your own behalf we still need Scott and Alina, but we want you to be as good as an AE. So keep these real detailed questions coming. So, Scott, let's talk about what you really want that 1003 to look like when they're approaching you, and what are the most significant pieces of information that you need on that 1003?
Yeah, so, and to kind of preface it a little bit, I really like to, when I explain the bank statement program to everybody, I like really to call the program overall, think of it as a self-employed borrower program, right? And under the self-employed program, we have numerous options for you: the business bank statements, the personal bank statements, or even the 1099 only option. So specific to the 1003, we're usually going to see one of three different scenarios. You either have a business owner, in which case on your 1003, you would obviously list the name of the business that he owns, the percentage of ownership, and his title, vice president, owner, etc. Your second is going to be your 1099 independent contractor. In that event, we would want you to list the name of the company that he receives his 1099 from as the employer on the 1003. List independent contractor / whatever his position might be, whatever he does there, and then obviously mark the self-employed box. Or lastly, you may have a Schedule C type borrower that basically just files taxes for the last 2 years, Schedule C. We see this a lot of times with maybe home health care aides, handyman, caretakers, etc. In that case, you would list the position for what they do for a living, and obviously in the employment section, usually you're going to put the borrower's name / Schedule C. So that's what we want to see on the 1003 in terms of the employment section, and that's very important. It's critical. If you're taking the application, or if you're guiding your borrower through taking it online, filling out one of your online applications, you want to make sure they're being specific with that. Because, for example, if we're using business bank statements to qualify the loan, we're going to need the name of the business that he owns on the 1003 to match the name that's on the business bank statements that we're using for income. Same goes for a 1099 borrower. Usually a 1099 borrower is going to go personal bank statements, or they'll use the 1099 only program. So we're going to need the name of the company that's paying them their 1099, because when we look at those personal bank statements, we're going to see deposits coming from that company. We need to be able to match them up to get you guys the most amount out of those bank statements in terms of income. And 1099 program as well. Obviously, the 1099 that we're using needs to match up the name on the 1003. Now, for the income section, this is where we differ a little bit from what you're going to see on conventional. Conventional, you're going to have a set of tax returns, you're going to calculate the income, and you're going to put the income that you came up with on the 1003. Well, for a bank statement loan, business, personal, or even 1099, you guys really don't know what that income is yet, because we have not calculated it. And we calculate the bank statements for you guys. You don't have to do that exercise. We'll explain a little bit later on the different options to get those to us so we can calculate them for you. But because it's not yet calculated, you can simply put in $1, you could put in 0, or you could even leave it blank. There's no need to have any income on the 1003 at that point in time.
Perfect. Thank you, Scott. Hey, Alina, a couple of questions already coming in. And again, this is going to be recorded. Again, the two experts on bank statements, now's your time to get these questions asked. Alina, what if you don't receive, from Benjamin, what if you don't receive a 1099?
What do you mean in regards to personal, just different deposits like cash deposits, self deposits, and so forth? Yeah, those are acceptable.
Exactly.
We look at all qualifying deposits. So obviously, depending on the nature of the business, it could be a bartender that's receiving cash deposits. It could be a nail tech working for multiple salons, receiving Zelle payments, because a lot of them now only accepting Venmo or Zelle. So it all depends on the nature of the business, but we will accept those as well coming into the account.
Great, Alina. Scott, another one about 1099. Jim's asking, what if you have a traveling nurse who gets multiple 1099s from multiple companies?
So for that type of borrower, I would recommend going the personal bank statement route. So, and you have two options for that borrower: personal bank statements or 1099 only. The 1099 only we can't do because we have a specific guideline that states the 1099 needs to come from one company for 2 years to use that program. So in that case, we would go with the personal bank statement borrower. And all we would need to do is, as I mentioned before, list each one of those sources of 1099 as employers on the 1003, and then we can count any deposits coming in from those sources into the personal bank statements as income for that borrower.
One thing I wanted to add, I know that you guys saw in the overview that we have an option to do 12 or 24 months. keep in mind that we do look at 2 years of self-employment and 2 years of business ownership. We do give you an option to go 1 year 1099 or 1 year bank statement program, but you still have to be self-employed for minimum of 2 years.
Yep.
Great point, Alina. Alina, talk, again, we want to, this is specifically just bank statements. So we want to really make sure when you are talking to your borrower, we want to make sure you are prepared to talk to your borrower about everything that you're going to need for a bank statement. So Alina, give us a couple of other things maybe on a 1003 you're looking for, like, where are they living? How are they paying? Give us some of that information.
Yeah, question. I always tell my customers, just like you would run DULP, you want those accurate findings, and you get the accurate findings based on the information that you input on the 1003. It's the same thing. We're not going to be able to release an accurate pre-qual to you unless we have all the accurate numbers in their liabilities, assets, primary rental or mortgage history. We do require a minimum of 12 months of verified rental or mortgage history. We don't allow rent-free on any of our programs. BOR is a case-by-case scenario, and it's only specific to those that are truly paying cash, not living with a relative, and so forth. So we do look at that 12 months of paper trail. But very important, I always say make sure the liabilities are accurate, because if once I release the pre-qual to you or Scotty or any other AE, the DTI is going to be based on the information that you added. So if anything is inaccurate and then you go into underwriting and the numbers come up to be over 50 and so forth, that can disqualify you from that loan.
Yeah, thanks, guys. And really, those are the critical pieces of information when you're talking to your borrower, because I know a lot of loan applications come through a website, and it's kind of a 1003 light version, so to speak. So, let's make sure we're asking those questions. Scott, anything else about 1003s that I don't want to spend?
I think Alina kind of nailed it when she said, and I use the same analogy when I'm talking to my customers and they're sending over a bank statement loan for pre-approval, as I tell them, when you're filling out the 1003, think of it no differently than a 1003 you were taking to run through DU. If you wouldn't run that 1003 through DU at that particular point in time because it's lacking information, then don't send it us for a pre-qual just yet until you have that information as well. The 1003s that come over for a pre-approval should basically be fully completed as you would when you run a DU.
So really,
except the yeah.
Go ahead, Alina, please.
Except the income, because that portion we're going to work on it for you, and we'll send you the worksheet back, and you'll be able to update it on the 1003. So that should be the only piece of information that's missing.
Yeah, so to kind of recap the 1003, we don't want income. We do want a really good, accurate job information. We want really where they've been living and how much they've actually been paying, and assets and liabilities. So that's 1003. Scotty, talk a little bit about credit. What are the credit requirements for borrowers to qualify for a bank statement program, more trade line wise too?
Yeah, so trade line requirement's going to be pretty straightforward. We're basically looking for either 2 trade lines open with activity in the last 12 months. They have to be open for 24 months, or 3 trade lines that are open for at least 12 months that have activity in the last 12 months. Those basically are our trade line requirements. If you meet either one of those 2, then you're going to qualify, no problem. Now, we can accept closed trade lines. So if you had a closed trade line, for example, that did have activity in the last 12 months, and we can use those towards one of those 2 for 24 or 3 for 12. And it's pretty straightforward. That's the trade line requirement on the program.
Yeah. Can I add something to it?
Absolutely.
Keep in mind, authorized user not considered trade line for us. Self-reporting utility bills is not a trade line. One major thing is that we probably 30% of our deals are done outside of our guidelines. So think of it as a gray line. And one example I'll give you, if a borrower was short a trade line, I was able to get around it with 24 months of canceled checks to use as a third trade line or a second one as a requirement. So you always, not always, but a lot of times you might have an alternative method to help you get the deal to come through. So never look at it in black and white, but kind of a gray line.
So Alina brought up a great statistic there. 30% of the loans Angel Oak closes do not meet our guidelines, because you have experts like Alina and Scott here who've closed hundreds, if not thousands of loans that they've seen almost every scenario, and they know how to work through them. I'm telling you, and that's why we're spending so much time on bank statements. It is, Alina mentioned earlier, it's over 60% of our program. So, and it's only going to keep growing with the other statistic about 24% business applications grew in 2020. So it's going to continue to grow. So I like the way Scotty ties those trade lines together. Alina, I love the way you added the 24 months of rent, of documenting your rent as an additional trade line. So those are great questions and answers to a trade line. The big one, the drum roll, is income, right? How do we calculate income? So Scotty, I'm going to let you start with income, and then we'll roll into Alina with some other questions here.
Okay, so yeah, calculating income on bank statements. I'd like to break it up into two categories. You have your business bank statements, obviously, and then you have your personal bank statement. So let's start with business. Business is the one that I think is the most straightforward. You have your borrower owns a business. He's 100% owner of that business. We're going to take either the 12 or 24 months bank statements for that business, your choice, and calculate the income on it by totaling up all of the deposits. So to get deep into it in terms of what we're looking for is we're basically looking for anything you would look at and consider revenue, true revenue and income. Anything that's a transfer, anything that's money moving back and forth, maybe from a personal account, check card returns, things of that nature, we're going to back those out. Those are not considered income or revenue. Any true deposit that is revenue or income to that business is going to get counted. We're going to total them all up, and then we're going to apply a default expense ratio. For the most part, our default expense ratio is 50%. So we're going to assume the business operates at a 50% expense factor. So real live example, we have a set of 12 months bank statements, let's say $1 million in deposits. After the 50% expense ratio, we have 500,000 in remaining deposits. We're then going to divide that by 12, and that's going to be our qualifying monthly income that we can use for that business. Same thing would apply if it's for 24 months. We just simply divide it by 24. It's really that simple. Now, let's take it a step further. As we all know today, we have a lot of different types of self-employed borrowers, or a lot of different types of businesses, a lot of businesses that are service providers, et cetera, and they're working from home or maybe a small satellite office, and it's a one-man show. They may not have a payroll with numerous employees. Their expenses might be minimal. In those events, we can actually go down as low as a 30% expense ratio. In other words, we can use 70% of the total deposits coming into that business account, and we would divide by 12 or 24 to come up with our qualifying monthly income. 30% is the lowest we go, so if it happens to have an expense ratio lower than 30%, 30% would be the default. So that's the number we're going to use, 70% of the total deposits. Now, when we're doing that and we're not using the 50% default, we are going to need a letter from either a CPA, an accountant, or a tax preparer, and it just needs to confirm for us. Really can be as simple as 2 lines. I can confirm Mr. Jones is 100% owner of XYZ business, and the business operates at an expense ratio of blank, whatever that ratio might be. It's literally that easy, 2 sentences, that's all we're going to need. And again, the expense ratio information is only needed if we're using less than the 50% expense factor. Now, a little advice I like to give everybody is when you're qualifying, when you're screening these borrowers, ask for the 24 months bank statements up front, because again, we're going to do the income calculation for you. And to take it real live example, what most of my loan officers, brokers do is they'll reach out to me and say, Scott, I have a borrower here, he's self-employed, I ran his income on his taxes, really wasn't much there, requested his 24-month statements. Guy doesn't really want me to pull credit just yet. He kind of wants to see what he qualifies for. So no problem. Upload those 24 months bank statements through our secure portal, send them right over to me, or use your Dropbox, whatever the case might be. And I can run a quick income calculation for you and say, look, based on what I see here, this is about the number we have to work with, $10,000 a month, $15,000 a month. Now you can get back to the borrower. Borrower says, okay, great. Then I can qualify probably for a house of X, and then allows you to pull credit. In that case, you can then send us the 1003, the credit, and the bank statements, and we can do a full pre-approval for you. But it's always best to get the 24 months up front in terms of the calculation, because we're going to calculate both for you, the 24 months and the 12 months. And we can use whichever one is giving us the most amount of income. So whichever one is more beneficial to the loan is the one that we can use. So it's always best to just collect the 24 up front.
Yeah, Scotty, great point. We're going to calculate that for you. There's only, I think, an eighth of a difference in pricing for the most part. So we're going to calculate that income for you. You do not have to do anything but get those 24 months from the bank statements from the borrower. We will do all that heavy lifting, and that's the income we're going to use during the underwriting process. Alina, anything to add about business, or do you want to just jump into personal here?
I'll jump into personal. So the income calculation on personal has the same concept, but there's a few rules around it. One thing to keep in mind, if you have two borrowers, two people listed on the personal account, could be husband and wife, both have to go on the loan unless it's paid of death or beneficiary and so forth. Even if, let's say, the second person is not employed, that's fine. We're going to use the primary wage earners mid-score, but you still have to put both on the application. As Scott mentioned before, transfers from other accounts are not considered a source of income. Transfers from savings account is not considered as income. So we do, just like on a business calculation on the personal, we do look at qualified deposits. One little caveat, if your borrower is 25% owner of any particular business, in this case, and we're going personal route for income calculation, we will allow transfers from that one business account with proof of 2 months of statements, and we will give you 100% of income because we're going to assume that any business expenses are coming from the business account, not the personal, that the actual income is going into the personal account. We do look at a couple of things just to keep in the back of your head. We do look at decline in income. If it hits 35%, your borrower will be ineligible. And that's what they were saying earlier. Let's collect 24 months. If it's going to hurt our income, we can always retract the latter 12 months and just use the most current 12 months of bank statements. And then we also do look at NSF and overdraft. We have a specific requirement. But again, that's where you have us. If it goes over 6 meaning in the last 12 months and 6 before that, I've gotten exceptions where I've had 22 in the last 12 months. And again, this is where we're going to dive in and see what's causing these overdrafts and NSFs and how we can sell it to management to get around it.
Yeah, I think, again, we mentioned it earlier. That's why Alina and Scott are so, it's critical that you work with them. And Alina, what if a borrower does not, and this is basically for Benjamin. Benjamin, thank you for your participation. This is awesome. Benjamin's asking, do we use an expense ratio for personal bank statements? So what if that borrower didn't have that business bank's account? Alina, what would be the expense ratio we would use on personal?
Great question. It's the same concept. When we automatically apply, it's going to default to 50%, but obviously you can go as low as 15% if applicable. So if your borrower works from home or a 1099 employee, minimum overhead, minimum expenses, then your expense ratio can go as low as 15%.
Right. Scott, hopefully Benjamin, that answered your question. Scott, anything to add regarding personal bank statements?
No, I think we covered it pretty good. The key there is, for the most part, your personal bank statements is going to be used for your 1099s and your Schedule Cs. Not that we wouldn't use it for a business owner. We do get a lot of situations where you have borrowers that own multiple businesses that they own maybe less than 50% of, but at least 30% of. And in that case, we would use a personal bank statement program because we can accept the transfers from each one of those businesses, as Alina mentioned. So it gives us more versatility for the straight business owner if we're, for whatever reason, not able to use the business bank statements, because we can use 100% of the deposits. As Alina mentioned, on the 1099 and the example you gave earlier, John, if you have a borrower that's getting 1099 from numerous sources, you can now go personal bank statements and count the income from all of those sources. And as we know, 1099s usually have minimal expenses, so you can go down to that 15% expense ratio. So we're using 85% of the deposits. And then the same goes for your Schedule C, where we're going to see different sources of deposits depending on what that person does for a living, and we can count those all as income. We do, to make it a little bit more relative to the industry and what you guys are dealing with on a day-to-day basis, is realtors. We do, I probably do 4 or 5 realtors a month on the bank statement program, whether they're buying or refining a primary, or even some of their investment properties, using it to buy investment properties. And as we all know with realtors, personal bank statements is great because they have all their deposits coming in from their agent or their company, or wires directly from title. But then again, you do have some realtors that might have one great month, and then they might have a couple of poor months, and then a couple of great months. It's, you know, all cyclical. And in that case, we have the flexibility of the personal bank statements or the 1099 only program. So it just, the personal bank statements is a great option because it provides a ton of flexibility for you guys.
Yeah, I'm kind of chuckling over here because Alina stole my 30% of the loans we closed don't meet our guidelines, and you just stole the realtors being almost 10%. Realtors account for almost 10% of the bank statement loans we close. That's number 3 on our list. I'll share 2 and 1 when we get to some marketing tools. So Alina, go ahead.
I wanted to add a thing. Can I add a few things, please?
Sure.
So to go back to the business account, for those of you that local to Florida and it's a Florida-based business, please keep in mind that we use our underwriters, and Scotty and myself, we use SunBiz religiously. So make sure that the business is in active status, not dissolved, because we will be looking at that. And if it is dissolved, it is going to be an issue. And as we know, a lot of people are relocating here to Florida. So just like you would, I'm assuming on the conventional side, keep in mind that if the business is local in another state and they're moving to buy a primary here in Florida, how is the business going to sustain itself? So just keep that in the back of your head. If it's a virtual business, if it does not require an actual local presence, then we'll be able to get around it. Anything outside of that, then you'll have to get creative and figure out how we're going to be able to sustain that business, and the income is going to continue here in Florida.
Yeah, and that's why you guys on this call, if you're not already working with Scott or Alina, you need to be, because they know how to get loans closed. Alina, I don't know if you mentioned this earlier when you were starting out on personal bank statements. What if you have a borrower who is self-employed and their spouse is W-2? Can we get that deal done for them?
Great question. Yes, we can. So we do not pull 4506s on the bank self-employed borrowers. So you would list both borrowers. You would put the W-2 income. We would look at the last 2 years of the W-2 plus the 30-day pay stub, and then we'll take care of the self-employed income via income calculation. But yes, you can do both. Even if the borrower, you have one borrower that's self-employed and is also receiving W-2 income from a different source outside of the one that we're using for income calculation, we're able to give that income as well.
Yeah, great question. And Scott, one last question here, and we'll kind of jump into a couple of great tools that we have. Scott, will you or Alina do a pre-qual based on a TBD?
Absolutely. Absolutely. I mean, the majority of the pre-quals that come into us for pre-approval are TBDs. Yeah. You know, in the live scenario I mentioned earlier, you have that borrower that wants to just get an idea of what their buying power is. And this is the beauty of the bank statement program. And to kind of take a step back, John, as an overview is I'll make a statement that, you know, has turned a lot of heads. I personally think bank statement programs, bank statement loans are easier to do than conventional loans. And I'll explain why. We all know what it's like to look at tax returns for a self-employed borrower, especially one that maybe owns multiple businesses. It's not fun. And you could have 5 different underwriters look at those tax returns and you'll get 5 different income calculations, right? So you're, in essence, it's almost like a roll of the dice when you're submitting the loan. With the bank statement program, that's not the case. When you get your bank statements up front, you're sending them to us at the pre-approval stage with your potentially TBD address. And we're going to give you an income calculation, an underwritten income calculation that you can now go shopping with. So we're going to run the numbers and say, look, maybe the tax return showed you $8,000 a month in income. But when we calculated the income on your bank statements, our average monthly income is now $20,000 a month. So now look at the buying power you were just able to increase for your buyer to be able to go out there shopping with. You're a hero to your realtor, because your realtor might have thought, okay, got to take them shopping for $300,000 houses. Now it's $800,000 houses. You're going to get a much bigger loan, obviously, and the borrower is going to be much happier because he's able to purchase a home that his true income, you know, puts him into. So to take it a step further, as I mentioned, we do that pre-approval. We send you back a pre-approval with a solid income number calculated, done, ready to go. When that borrower goes under contract and you upload that loan and submit it to us, the income's done. That portion of it is completed. Your underwriting approval is going to be, you have a much higher chance of getting a clear approval with just about basic standard conditions, insurance, title, etc. So from that standpoint, I personally think they're easier to get done. There is no income that needs to be submitted when you submit a bank statement loan to underwriting, and the income is already done. So when the underwriter gets the file, they simply revert to the income calculation we had done at the pre-approval stage. They use that number and they move forward.
And Scotty, are they taking those bank statements? You mentioned this. You're basically done. They're taking those bank statements from our database, right?
Yeah.
You're done. You upload those bank statements to us at the pre-approval stage. Our underwriters pull the bank statements from the system as well as the income calculation from the system. You don't need to resubmit the bank statements. We're not going to redo the income. It's done. It's completed. You're submitting your loan with an income calculation already done. So when your borrower goes under contract, you got from myself or from Alina that the income is $20,000 a month. You put it into your system, your ratios are good, everything works, you submit that loan, you're good to go. You're going to get a clean approval with your basic standard conditions that you would see on a conventional loan, title, insurance, etc.
Alina, anything to add, or let's go to quick quote?
Yeah, let's go to quick quote.
And Juan, we will get you guys your proper AE contact, so thank you for reaching out.
Hey, John, if I could add, I kind of want to just take a quick step back and go over a few highlights on the different things that we can do for the bank statement program that I think are important or going to add value to everybody on this call.
Absolutely.
So a couple of things, and I'll refer to my matrix here as we go. As we mentioned, you can do 90% loan to value on a purchase of a primary residence with a 700 credit score. And as Alina mentioned, there's no MI on those. But that also goes up to a $2 million loan amount. So think about it for a second. You can purchase, say, a condo, go up to $2 million loan amount, 90% LTV, no PMI with a 700 credit score. That's really strong. The other part I want to point out is on second homes and investment properties on the bank statement programs, all of them, personal, business, or 1099, you can go up to 85% loan to value. So again, purchase investment property, 15% down, qualifying with bank statements. And again, that can go up to 2 million loan amount. That is really strong. Cash out refis. On cash out, second home and investment property, we can go up to 85% loan to value with a 660 credit score. You don't find that out there much. Yeah. Bank statement program, 660 credit score, 85 LTV, cash out refi. And then lastly, Alina touched on it earlier, I personally think it's the most underutilized option we offer for not only for this program, but for all of our programs, is the interest only option. You can go interest only up to 85% loan to value on the purchase of a primary, second home, or an investment property. I don't know why it's not used more, especially in this market, but it's a huge selling point, at least a talking point, to get your foot in the door with your realtors and discussing it with your potential buyers.
All right, Scotty, you peeled the onion back even further, and my God, Alina, are you going to go where I think you're going to go? Go ahead.
I have a couple of things to add as well. Great little caveats, the recent changes we've done. Cash out is now down to 6 months, by the way, as long as CDA supports the value. So that's huge. It was 12 months, now it's down to 6 months. Duplex can be treated owner-occ, which will allow you to go up to 90% LTV. And also we do offer delayed financing, which, because you know right now with the market, the crazy market, I'm personally shopping for a house and it's a nightmare. Everybody's putting cash offers. So for your borrower that put in the cash offer, we can get you that cash back to recoup that investment that will be treated, well, it'll be underwritten under purchase guidelines, but the borrower is pulling the cash out. And as of recently, we've changed the delayed financing to offer it under hard money loan. The only difference is this one has to be closed under 90 days versus 6 months.
Yep. So local to our market here is huge because you have a lot of people coming in here buying cash because such a competitive environment. They're needing to just, get under contract, buy the property, and then deal with it after the fact. So we can do that delayed financing, like Alina said, on the bank statement programs. And I'll take it a step further. That can be done on primary, second home, or investment. So as I mentioned earlier, in Florida, with so many people moving here or buying here that live out of state, the second home and investment properties, 85% LTV and interest only options is huge. Lost my train of thought for a second, but I did want to add a couple of more things escrows can be waived on these programs. So we do allow a escrow waiver if you have a 700 credit score and the LTV is at least 80% or less. The other option that I want to mention was, sorry, again, lost my train of thought on it. Well, I'll come back to it.
Interest only?
No, we got the interest only. I'll come back to it.
All right. Hey, and Scotty and Alina, that's why you two are fantastic AEs and top producers, and it is amazing. Alina, I thought you were going to get to that delayed finance. That is huge right now, especially in our southern states. We're seeing that become a big thing, and second homes LTV might be going up.
Going up, and it came back to me.
Stay tuned.
Condos came back to me. Condos. Let's talk about condos. Condos.
Oh, yeah.
It's a huge topic in South Florida right now. I'm going to do a little video, actually, I plan on doing later today. But on condos, as we all know, the agencies implemented all those stringent requirements with all of the new documentation that is required for you to get the loan qualified in that condo. I've gotten tons of phone calls in this last week alone on condos. So for condos, we can do condos on this program, as we mentioned, up to 90% LTV on primary, up to 85 on second home and investment. And for us, our process has not changed for condos. I repeat, our process has not changed. We have our non-QM condo questionnaire that needs to be completed, and that's it. We don't require the budget. We don't require the financials. We don't require the condo docs. We don't require the balance sheet. We just ask the association to complete our condo questionnaire. And we've always been very flexible with condos in the sense that we can do non-warrantable condos. Now, there's a number of different reasons a condo can be non-warrantable. I won't go into the details of every single one, but we can do non-warrantable condos. The most popular one is reserves. So let's talk about reserves. As we know with conventional, you need to meet the 10% reserve requirement, or whatever the reserve requirement is for the program, based on what the current year's budget is collecting. The difference with Angel Oak is that we will use not only what they're collecting in the current year's budget, but any separate accounts that were funded from previous year's collections of reserves. What we find is 99.9% of the time, if you have an association that's only collecting maybe 5% in the current year's budget, the reason they're doing that is because there's already an account that's funded from previous years with money sitting in it. We can combine those two numbers to meet the reserve requirement for the program. So I think that's going to be a huge topic, great value for all of our loan officers listening here going forward. If you have issues with condos, give us a call right away, because we do not have the requirements that were just implemented by Fannie Freddie on the conventional side.
Yeah, Scotty, great points. Alina, great points. Hey, we are about a quarter to 11 here. We allocated an hour. So let's talk about quick price. This is being recorded, just so everyone knows. This will be going out to the entire database no later than tomorrow. Alina, let's talk about a great tool we have here that's available 24/7, and let's talk about our quick call program, our quick call tool. Sorry.
So Quick Call, you can download it on your phone, or you can do directly from the website. I don't know about Scotty. I personally do not quote rates over the phone. Rates are subject to change and are not valid unless they're locked. So please, I'll be more than happy to stay with you on the phone while we price it out, but I will not quote rates on the phone. Depending on the relationship type, now we have both wholesale and non-delegated. So for wholesale, I'll just ask you a few quick questions to plug in the numbers, and I'll give you the par pricing. John, do you want to plug in the scenario?
Yeah, I'll do it. I got you.
So we did 750 loan amount, 760 credit score, 75 LTV. And if you see full doc, they'll give you only full doc options. So you have to make sure and change it to income documentation, which will be the bank statement. And then always, sometimes people forget, make sure you have the accurate occupancy, if it's owner or second home or an investment property.
So what we have here is I'm sorry, Alina, we requested.
No, go ahead, John.
Yeah, we requested a 75% LTV. Your borrower is eligible, based on the parameters we just put in, is eligible for a 90%. And the par rate, again, par rate 30-year fixed is 4.125. So dependent upon if you want to go borrower paid compensation or lender paid compensation, and whatever your company has decided, we would either add to that 4.125 to get you your lender paid comp. And we have multiple iterations and options within that, or you go borrower paid and you charge the borrower origination up front. And then we also provide a few highlights of our bank statement program, seasoning on bankruptcies and housing events. And we didn't touch on that, but we talked on trade lines, but 24 months minimum seasoning for bankruptcy and housing events. We require 6 months reserves, but as Alina said, if you're doing a lower LTV, we might allow a little less in reserves. And then just some highlights of minimum loan amounts. And then this needs to be updated because it's now 6 months seasoning required on cash out transactions.
And cash out can meet the reserve requirement as an FYI.
Great point. So anything else regarding this is available 24/7. You do not need credentials to access this quick quote tool. And again, it's available 24/7. Scott and Alina are only available 23/7. So this is a great tool. If I was a loan officer calling my account executive, I would run this scenario first so you have a great kind of understanding where you want to go, and your conversations can be a lot more productive about how Alina and Scott can help you get that loan closed and ask those second, third, fourth. And you see they'll ask, a half a dozen questions to make us say, okay, that sounds like a deal we can close. So, Scotty, anything to add regarding?
I also wanted to mention that this is how you would submit documents to us for the pre-qual. You can do it via the pricing engine. This is the program. Everything looks great. You click select, and then we also have a secure upload link. So you're not emailing secure documents over to us, but you're using this secure engine to send it over.
So I am going to pop into one I've already got in here. Hold on, where was it? Okay, so I filled it out. The account executive's Alina, right? ABC Mortgage, Joan Smith. Her NMLS is, 1, 2, 3. Obviously, this is the information we're going to require. And that only happens when you click on this select button, right? You're going to click on this select button, and then it's going to take you to this page. And all it is dragging and dropping your 1003 here, right? Your 1003, your credit report, and then your bank statements. Let me lower that just a little. And here's your bank statement. No, that's your 1008. Apologize there. See if I can get the bank statements in there. And there are your bank statements. And then you fill out some other information if you know any of it, and you're submitted. And that goes directly to Alina or Scott. That's it.
Instant.
We're working on looking at that 1003, like we said, and asking maybe some questions if we're missing information. We're looking at the credit report, making sure that borrower qualifies. And then we have that team of experts that is already starting to calculate those bank statements for you. It's pretty easy, really.
Simple. And one thing I would ask everybody on this call is go ahead right now and please bookmark that quick qual pricing engine, because it all starts there. That's where you're going to get your pricing initially if you're quoting something to a customer, or at least trying to get a range of what the pricing looks like. That's where you're going to get your parameters or your confirmation that that particular loan and LTV and scenario can be done by simply answering the questions. If it gives you pricing, you know that loan can be done. And that's where you would need to go every single time you want to submit a loan for a pre-approval to your account executive and upload your documents, your 1003, your credit report, and your bank statement. So again, like John mentioned, no credentials are required. Definitely, I think one of the most important things you can get out of this call is bookmark it and get comfortable with using the pricing engine.
Yeah. And I don't know if Carol's going to close this, but a couple of things I do want to share with you guys. Again, Scott, Alina, my God, you guys are the best in the business. I really appreciate you taking the time out of your day. I appreciate everyone who joined us here. You are vested in your own business, and that says a lot about you as a loan officer and a professional. And we are going to have a series of this next week. We are doing just our investor cash flow. So we're going to do a deep dive again, what that 1003 credit, and we don't have to calculate income for you, right? So we're going to dive deep into the tips and tricks on how to close those deals. Oh, you know what? I apologize. I'm going to back up 1 minute here. I jumped the gun here. Sorry, Carol, before you come in here. One of the things I did want to share is our marketing, and Scotty mentioned it earlier, about realtors being 10% of our and Alina and Scott can get with you after this. You know, I know we got a few more minutes here, but now you do need login credentials to get to this part of our website. But everything you're going to want to do, we've got an awesome marketing department. So flyers, we have a bank statement flyer in here. So I promise you, I share with you, Scott gave us the number 3 person, 10% of the loans we close are for realtors themselves. Number 2, construction and home improvement is 15% of the loans we close. And then professionals and business services are close to 20%. So why not target market? And Scott and Alina have the rest of those categories or those segments of the businesses that we close loans for. Why not market to those segments that we already know are a large percent of our business? And so you can come in here, fill out this flyer with your contact information and market that to realtors, market to construction and home improvement. We also have social media posts. So we have one for, I'll show you the bank statements. We have it for borrowers. We've developed this all for you. You don't need to do anything. You just need to say, do I want to market it to a borrower? This is for Instagram and Pinterest. Or do I want to market to realtors on Instagram, Pinterest, Facebook, LinkedIn? It's already been done for you. Refis, MBA is saying refis are going to drop by 62% in 2022. I think that's already exceeding. I think the last 2 weeks it's dropped by 67%. What are you going to do to make up that income? So again, I know I jumped around here. I don't know if Alina or Scott have anything else to add to the marketing portal. Like they can take you through that individually and maybe spend a little bit more time there. But Scotty, any point?
Presentations, presenting, spreading the word about these products and programs. Guys, use us as your account executives. We are here to help you. If you want to do any presentations for real estate offices, any referral sources you'd like to do, we are happy to come along with you as your partner, your investor, your bank, whatever the case may be, whatever you want to call us, and we can come and present on all of these products and programs on your behalf. We can show you how to market the event prior to by sending out some of these flyers and getting it out and generating the buzz for a bunch of realtors. And we have a PowerPoint presentation we can help you prepare, fully customized with all of your logos and your information that we're just helping you speak to the products and programs on. It's a great way to get your foot in the door with realtors. They love to hear about these different types of products and programs. The light bulbs go off. And we're here for you. So just reach out to us. We can get something set up and we're happy to come and present on your behalf.
And Alina, anything to add there?
No.
Scott and Alina, again, thank you so much. I know Carol's going to close us out. I love you guys. I'm honored to be working with such 2 professionals. So thank you. Carol?
Me too.
I want to thank you all. Scott, Alina, John, you guys that was an amazing presentation. And if the attendees' heads aren't spinning right now, thinking how they can make more money, then I don't know what, then they're not listening. But you said you did mention you were going to have 2 more.
Yes.
2 more. I just wanted to give everybody the dates so they could mark their calendar. It's February 9th. And the next one and the one after that is February 16th. Our trade show is March 9th, and this is a lead into that because you guys are going to be one of our breakout speakers at the trade show. We're looking forward to all the information that you're going to have there with you that night and looking forward to seeing you in person.
Yes.
So we'll see. I'm sorry, what, John?
Oh, Carol, and if you're on this call and you're not a member of your local chapter and the state chapter, get involved. You really need to get involved and help the industry. I mean, there's a lot of information being thrown around, and let the FAMP filter it for you and give you good, relevant information. So it's really critical you join and support your local chapters.
Amen, John. That was. We'll end it at that. Thank you, John, and thank you all for attending today, and thank you all for presenting. Have a great afternoon. Take care now.
Thank you.